Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and it's Wednesday, April 27th. Okay, I got kind of a twofer here. Two stocks, Facebook and Fitbit, because I like the way they sound together. Look, Facebook reported blowout earnings. Their revenue growth is like almost off the charts. I want to say, I'm not looking at the article in front of me because I'm doing chart analysis here. Something like 42%, whatever. So they're knocking it out of the park. The stock is up, trading at an all-time high. Let's look at here's the chart. Huge, huge, huge move on big volume. Now, you know, even here, this is a 5-minute chart, ladies and gentlemen, and we have how much? 124,000 shares trading. So this stock is still, as I do this video, this is still working pretty hard. Here's the deal. My bet is tomorrow you're going to see various analyst upgrades. You know, the trend had been kind of looking a little bit sluggish. You look at this, you know, at the chart over the last several weeks, but looking at the daily chart, this is a trend that's still intact. Don't you wish you'd bought this here at 28 bucks? Me too. But that's not the case. So what are you going to do now? I would suggest taking a little bit, and I talked about this if you just look back at my last chart of the day video, which was about I think it was just a few days ago, but maybe a week. I had mentioned that if you believe in Facebook, if you want to be long the stock, then buy some of your stock before earnings, and then you can get more. Add to the position. If the stock breaks out, great, you have a higher cost basis. Well, at least you bought some down here. If the stock breaks down instead, like let's say their numbers weren't great or whatever, but again, you're a Facebookian, you believe in it, you think their best days are ahead of them, stock pulls back because of a bad quarter or something, then you go ahead and buy some more. Now you've got a lower cost basis. So the point is, you started with the stock close to the 50-day moving average, but really here's resistance here. We could just call support like right at the 200-day moving average. So you're buying some of the stock right in the middle, and then you're adding to your position on any move higher or on any move lower. So your cost basis is still reasonable. But the whole point is this: don't be shorting this stock. And if it's for a quick short, like here, a little reversal, that's fine. But this isn't a trend thing here. Seriously. I mean, this is a breakdown to the 200, then a breakout. Oh my gosh, it's a fake out. I got to get out of here. Okay, fine. And ultimately, the stock traded down. But the uptrend, and this is what I'm trying to tell you, the uptrend is intact. It has been intact for a long time. And you will find, and yes, I'm talking to you new guys, you will find that you will make more money over time by holding stocks and just holding on to them. Even if they're pulling back a little bit, that's fine because stocks go up and they go down. And so you will find, though, that if you're getting stocks that are trending higher, 200-day moving average sloping up, then holding on to those stocks and letting them work is going to be, it's just going to work for you. Okay, Fitbit, I don't really care about this chart. I care about this one. Company reports earnings on May 4th, right? That's next week, I believe. I like the way this is trading. What I'm talking about here is just a pre-earnings run. The way the market's going, I think Fitbit's going to run a bit into earnings, and this would be a similar type of situation where split the difference. If you like Fitbit, take some stock now. I think this is a key bottom at 12 bucks or so. Of course, now this is up how much above? 50%. It's essentially it's up 50%. I think this is the bottom. I really have a hard time seeing Fitbit falling down that far on adverse earnings. So if you like the stock, buy a little bit now around 18-ish. Hopefully it even pulls back a little bit. You can buy some more. Just a little bit. And if the stock starts screaming, you buy a little bit more. If it pulls back, then you buy a little bit more too. that's trading. I'm not talking about making predictions here on movements of a stock. That's called gambling or hoodwinking. But this is trading, where you have an idea, you take a small position, always tipping the hat to risk, and that way, you're never going to hit like a total grand slam, but you're never going to get hit by the ball and get taken out for your career as well. So you kind of split the difference on stocks that are trending higher, and that's going to work for you. Okay, that's it for this video. Members, over to the strategy session. A lot of the stuff that we looked at yesterday and that we've looked at for a while continues to work. So I'm trying to narrow the focus as much as possible. I've also got some options tips for you.